Lily, I want to start with two numbers that should concern every American right now. In May 2026, the 3-0 year, Treasury yield hit 5.2%.
Okay, but what does that actually mean for regular people?
It's the highest level we've seen since July 2007. And if you remember what happened shortly after that.
The financial crisis.
Exactly. The bond market was screaming warnings that most people couldn't hear. And here's the second number. Consumer confidence just hit its lowest point since tracking began in 1952. That's 74 years of data, and we've never been this pessimistic.
So the bond market is flashing red, and people feel terrible about the economy. But I keep hearing that the economy is doing fine. What's really going on?
That's the exact question we need to answer. Because for decades, the global financial system has had one solution to every problem. Lower interest rates, create more debt, print more money. Every single time the economy slowed down, central banks stepped in with another rescue package.
And that worked, right? I mean, markets kept going up.
At first, yes. Governments borrowed more, corporations borrowed more, individuals borrowed more. All that cheap new money pushed stock and real estate markets higher and higher as the currencies lost value. People saw asset prices rising and believed the system was under control.
But something changed.
There's an old story called The Sorcerer's Apprentice. A young apprentice discovers powerful magic that can make life easier. The magic solves problems at first, but eventually, the apprentice loses control of the forces he unleashed. Every attempt to stop the problem only made it worse.
And that's where we are today.
I'm afraid so. The modern financial system became dependent on debt creation to sustain the appearance of growth. As interest rates fell, it was easier to take on and service more and more debt. But now interest rates are rising at the same time that debt levels are exploding.
So we have massive debt that needs to be refinanced at much higher rates.
That's the mathematical trap. And it's not just happening in the United States. Japan, the UK, Europe, and the United States are all seeing rising yields at the same time. The entire world became dependent on cheap debt, particularly after 2008.
What exactly happened after 2008 that made this worse?
The solution to the last debt crisis was even more debt. Here's a stunning fact. 70% of the $31 trillion in federal debt was accumulated in just 15 years, from 2008 to 2022. In 2008, federal debt was $5.8 trillion, about 40% of GDP. By 2010, it had jumped to over $9 trillion, 62% of GDP.
That's almost doubled in just 2 years.
And it didn't stop there. Governments borrowed more, corporations borrowed more, consumers borrowed more. The system survived by continuously expanding debt faster than growth. That kind of worked while rates stayed near zero.
But now, rates are going up.
Right. And when rates rise on massive debt loads, the math changes very quickly. Think about it like this. If you have a credit card and you're only paying the minimum each month, the interest keeps getting added to the principal and it grows exponentially. That's in a low-rate environment. Now imagine rates suddenly jump. The debt becomes unpayable.
So what you're describing isn't just an economic slowdown. This is structural.
Exactly. Sovereign debt sits at the center of this structure. It's the full faith and credit of governments around the world that keeps this game going. Let me define that term. As long as you trust the government, you will continue to loan them money. That's what full faith and credit means.
And when people stop trusting,
the system breaks. But it's not only governments. Corporations also became addicted to cheap money. Businesses borrowed heavily to fund stock buybacks, acquisitions, expansions, and speculation. Higher rates now increase financing costs across the corporate world.
Which means less investment, slower growth, layoffs.
Yes, and consumers followed the same pattern. Credit cards, auto loans, student loans, personal debt all expanded rapidly. Why? Because purchasing power was already weakening beneath the surface. Debt became a substitute for real wage growth.
So people had to borrow just to maintain their living standards.
The system needed consumers borrowing to keep economic growth alive. At the same time, central banks massively expanded their own balance sheets. Since 2008, central banks stepped in repeatedly to stabilize markets through quantitative easing and zero interest rate policies.
But that can't go on forever.
No, it can't. And here's where we hit the trap. When you create that much debt, you need low rates to service it. But low rates eventually fuel inflation. When inflation gets out of control, you're forced to raise rates. But higher rates explode the interest expense, which requires even more debt creation to pay the interest on the existing debt.
That sounds like a doom loop.
It is. Increasing debt requires lower rates. Lower rates fuel inflation. Inflation forces higher rates. Higher rates explode interest expense, which requires even more debt creation. Eventually, confidence in the currency begins breaking down.
Is that why consumer confidence is at a 7-4-year low?
Partly. People intuitively sense that something is broken, even if they can't articulate exactly what it is. They see their purchasing power eroding. They see prices rising. They feel financially stressed, even though the headlines say the economy is strong.
So what happens when confidence breaks down?
Throughout history, when debt-based monetary systems reach these extremes, markets begin searching for monetary alternatives. And that's exactly what we're seeing with precious metals right now.
You're talking about gold and silver.
Yes. Silver is beginning to reflect that growing monetary stress because it's both an industrial metal and a monetary metal. Notice how strong silver remains, even with higher rates. Markets are beginning to anticipate larger monetary problems ahead.
But hasn't gold been going down when interest rates go up? I thought that was the normal pattern.
That used to be the relationship. But something changed in 2022 and 2023. Despite a sharp rise in real interest rates, gold prices actually climbed. And more recently, gold has rallied even further, regardless of higher real yields. In January 2026, gold hit an all-time high of about $5,589 per ounce.
So the old rules aren't working anymore.
The traditional inverse relationship between gold and real interest rates appears to have broken down. Why? Because gold is not someone else's liability. It's the only financial asset that runs zero counterparty risk. It survived empires, currency failures, wars, and monetary resets.
How many times has this happened in history?
One study of 775 currencies throughout history found that not a single one survived indefinitely. The average lifespan of a fiat currency is estimated at just 27 to 35 years. Approximately 152 fiat currencies have collapsed due to hyperinflation. Every fiat currency that is no longer in circulation has either failed or been replaced.
Every single one.
Every single one. And here's what makes our current moment unprecedented. Since 1971, for the first time in recorded history, every currency on Earth has been fiat simultaneously. There's no gold-backed alternative anywhere in the system.
That's actually terrifying when you think about it.
It should be sobering. But this is where biblical wisdom becomes crucial. Let me read from Proverbs 11. 1. Dishonest scales are an abomination to the Lord, but a just weight is his delight. Quote.
A just weight. You're talking about honest money.
Exactly. Throughout Scripture, God commands honest weights and measures. When ancient rulers debased their coins by mixing in cheaper metals, they were using dishonest scales. When modern governments devalue currency through infinite printing, they're doing the same thing.
So fiat currency is essentially a dishonest scale.
It violates the principle of just weights. Gold and silver, on the other hand, have served as honest money for thousands of years. Not because a government said so, but because trust accumulated around them over centuries. They can't be printed into existence.
What about Proverbs 22-7? The borrower is slave to the lender.
That's exactly what we're seeing play out on a global scale. Nations that once were lenders are now drowning in debt. Individuals are enslaved to credit card companies and student loans. The debt-based system creates literal bondage.
So what's the way out?
Let me give you the Noah's Ark framework. Noah didn't wait until the flood was at his doorstep to start building. He prepared while there was still time. He preserved what was essential to carry forward into the new world.
And gold and silver are the ark?
Gold and silver are the bridge to get your purchasing power from one monetary system into the next. When one system dies, another one is born. That's the pattern throughout history. And those who preserve their wealth in real assets are the ones who make it through the transition.
But this feels overwhelming. What can regular people actually do?
Start small, and start now. First, Understand that the goal isn't to get rich. The goal is to preserve purchasing power. If you lose your principal, what do you have to work with?
Nothing.
Right. So the first step is to convert a portion of your wealth from currency that's being debased into sound money that holds its value. How much? That depends on your situation, but even 10 to 20% in physical gold and silver is a meaningful hedge.
Physical, not paper gold.
Correct. You want to hold real wealth outside the financial system. Not a promise to deliver gold. Not a gold ETF. Physical metal that you can hold.
What else?
Build local community. Go to farmers markets. Get to know who grows your food. Learn a new skill. Volunteer. There's safety in numbers. Power in those numbers. Freedom in those numbers.
Because if the financial system breaks down, we'll need to rely on real relationships and real skills.
Exactly. Focus on tangible assets. Food, water, energy, security, barterability, community, shelter. These are the things that matter when paper promises fail.
This is starting to sound like Matthew 6. Do not store up for yourselves treasures on earth, where moths and vermin destroy, and where thieves break in and steal. But store up for yourselves treasures in heaven.
That's the ultimate perspective we need. Our true treasure isn't in any earthly currency or metal. It's in our relationship with God and the eternal kingdom. But that doesn't mean we should be foolish with the resources God has entrusted to us here.
So we're being wise stewards.
Right. We're being prudent. We're reading the signs of the times. We're not creating fear. We're acknowledging reality. The bond market is sending clear signals. Consumer confidence is at historic lows. Central banks face an impossible choice. Keep rates high and watch the debt structure collapse, or lower rates and accelerate currency debasement.
There's no good option.
Not within the current system. That's why we're at the end of this currency's life cycle. But that doesn't mean it's the end of the world. It means it's a transition. And transitions create both danger and opportunity.
So the opportunity is for those who prepare.
Yes. Position yourself before the broader public recognizes that this structural shift is taking place. That's not about being smarter than everyone else. It's about acting on what the data is already showing us.
And you really believe this is imminent?
I can't tell you that you'll lose all choice by a specific date. But I can tell you that every warning signal is flashing. The 3-0-year Treasury yield is at levels we haven't seen since right before the last crisis. Debt is at unprecedented levels. The interest expense on that debt is compounding faster than economic growth. Consumer confidence is at a 7-4-year low.
Those aren't predictions. Those are facts.
Exactly. We're not speculating about what might happen. We're observing what is happening right now. The magic wand is broken. The apprentice has lost control. And those who understand the story know how it ends.
But there's hope in that, isn't there? Because we can choose how we respond.
Absolutely. This is where faith meets wisdom. We trust God for our ultimate security, but we also exercise the discernment He's given us. We don't panic, but we do prepare. We don't hoard out of fear, but we steward wisely out of love for our families and communities.
And we remember that our true citizenship is in heaven, not in any earthly economic system.
That's the foundation. When you have that eternal perspective, you can look at economic turmoil with clear eyes and a steady heart. You're not paralyzed by fear because you know who holds the future.
So for our listeners, what's the one thing they should do this week?
Have an honest conversation with your family about financial resilience. Not to create fear, but to create a plan. Look at your exposure to debt. Consider your allocation to real assets versus paper promises. And most importantly, ask yourself, where is my true treasure?
Because where your treasure is, there your heart will be also.
Exactly. We're living through a monetary regime change. Every generation faces challenges that test their faith and wisdom. This is ours. But we're not the first to walk through economic upheaval, and we won't be the last.
And we have both historical wisdom and biblical truth to guide us.
We do. Gold has served as money for over 4,000 years because it's no one's liability. It requires no trust in any institution. It just is. Silver has the same properties plus industrial uses that make it even more valuable in our technological age.
So they're not investments, they're insurance.
That's a good way to think about it. Insurance against currency failure. Insurance against the breakdown of trust in the system. Insurance that allows you to transfer purchasing power from this monetary regime into whatever comes next.
Whether that's next year or 10 years from now.
Right. The timing is uncertain, but the direction is clear. We're moving toward a new monetary system. The only question is whether you'll be prepared when that transition accelerates.
This has been sobering but also clarifying.
That's the goal, to translate financial noise into understandable language so people can make educated choices that put their best interests first. To help people look at things just a little bit differently. Because when you do, it's amazing what you see.
And what you can do about it.
Exactly. This isn't about fear. It's about wisdom. It's about stewardship. It's about building resilience at the family and community level. And ultimately, it's about trusting God while being faithful with what He's entrusted to us.
Until next time, wherever you are in this world, please be safe out there.
And remember, store up treasures in heaven, but be wise stewards on earth. Thanks for listening to The Way of Wealth.